Hello and welcome back everyone. Welcome to the second Committee Chair Engagement session. My name is Hanne van Voorden and I'm heading the IAIS Supervisory Practices and Operations team. I will just briefly remind everyone about the structure of the session and how we will handle the questions and answers. Matt Walker, the Chair of the Policy Development Committee, he will begin with a 10-minute presentation on the committee's work, and after that we will have about 15 minutes for questions and answers with you. You can send your question either via the chat function, or you can let us know that you'd like to take the floor, also via the chat. So without further ado, I will now hand over to Matt for his opening remarks.
Thank you, Hanne, and hello, everyone. I'm really honored to be able to be here today to represent the IAIS's Policy Development Committee and tell you a little bit about both what we've been doing and what we have planned. Before we begin, though, I need to give a short disclaimer that I'm speaking to you today in my capacity as Chair of the Policy Development Committee, and my reviews should not be understood as those of my employer. Also on the line from PDC are Vice Chairs Paolo Cardoni and Ricardo Garcia. We operate very much as a team, so you'll probably hear them coming in response to questions. Turning to the first slide. And as always, let me begin with the insurance capital standard. Last December, the IAIS adopted the ICS and completed its comparability assessment of the US's aggregation method. The IAIS's adoption of the ICS was a major milestone for the IAIS and for the global insurance sector. The ICS provides a globally consistent, risk-based measure of capital adequacy for IAIGs and forms the quantitative element of the common framework for the supervision of IAIGs, or COMFRAME. The ICS was designed for jurisdictions to implement it as a group-wide prescribed capital requirement, representing a solvency level below which supervisors would intervene on group capital adequacy grounds. The ICS promotes IAIGs maintaining sufficient capital to withstand potential stresses and provides a globally consistent framework that supervisors can use to evaluate the capital adequacy of these groups. Currently, we've identified 60 IAIGs from 19 different jurisdictions worldwide. By definition, as IAIGs, these groups operate across several jurisdictions, which makes it really important for supervisors to have a common language that we can use to discuss the capitalization of these companies, as well as a common minimum standard for that capitalization. Now that the ICS is adopted, we're working to facilitate its implementation by members. We're currently working on several important ICS-related supervisory and supporting materials. All of these will be subject to consultation, and we'd welcome your input. First on that, and the one we've been spending most of our time at PDC, is on reporting. The most on this subject is on reporting and disclosure. We're developing new COMFRAME standards for the ICS within the ICPs on what information should be reported to supervisors on capital and what information will be disclosed to the public. Those are in ICPs 9 and ICP 20, respectively. As we're thinking about it, what it gets disclosed to the public in ICP 20 will be a subset of what is reported in ICP 9 to supervisors. We plan to release both of these potential plan revisions later this year for consultation. We're also working on an application paper on the availability of capital. That paper will aim to share experiences on how group-wide supervisors address availability of capital issues in their group supervision, particularly when applying a consolidated group capital standard, such as the ICS. Those of you who have been around the IAIS for a while may remember this issue coming up repeatedly as we were developing the ICS, so we're happy to be able to come back to it. This paper will go through the various ways that this comes up, including due to legal entity restrictions or capital not being paid up, and share information about different supervisory practices around the world to address these issues. Turning to the next slide. The biggest issue for PDC over the last several months is just trying to bring clarity to how the ICS will be assessed. We've previously heard comments from our members and from many of you stakeholders on the line that they want clarity about how the ICS will be assessed. So we've really prioritized that. We've made good progress. Last month, we agreed on the high-level principles, or HLPs, for the ICS implementation assessment methodology. These principles will primarily serve as guidance as we develop the full ICS implementation methodology. Importantly, on the principles, I do want to emphasize that our ICS implementation standard will not be a line-by-line assessment like what we do for many other standards, but it will still be designed in a way to serve its purpose as a minimum standard and as a common language for the supervision of IAIGs. There's 6 different ICPs. You can see the subjects on the screen. I'm not going to go through each of these, but I will highlight a few of them in particular. HLP2 covers the different components on which we'll be issuing ratings. These include things like valuation, capital requirements, and capital resources, as well as general sections. HLP3 deals with identification of deviations and the recognition of offsets within those components. So something like if a jurisdiction were higher on capital requirements in one particular area and lower in another, HLP3 deals with how we would think about the offsets between those different items. HLP5 covers how we go from those component ratings to an overall rating and the recognition of offsets across components. So this is something like a jurisdiction being perhaps more conservative on valuation and maybe less conservative on capital requirements because of that. That kind of offsetting would come up under HLP5, and you can see what we plan to do about it there. As we've said before, we'd really welcome your engagement on these items as we go from the HLPs to the more detailed methodology and as we develop the self-assessment questionnaire. We've been working out some of the details on how we will do that engagement. As a next step, we're going to be setting up a dedicated virtual event on this on September 9th to get your input. Please be on the lookout for that, the invitation. I understand it'll go out later today. I do want to highlight that that sort of engagement will really differ from a lot of the other IAS engagements you've been to. Here today, we're mostly communicating information. It's mostly you're asking questions and are answering them to try to bring clarity. On this upcoming stakeholder event, we're really looking to get your input as we're at an earlier stage of developing this. We'll be looking for people to provide views as part of this session. So if you are interested, please consider volunteering to give views as part of that. There'll be more details as the invitation goes out. And that's all I'll say about the ICS implementation assessment. For now, I think Peter will come back to that in his portion later, so stay tuned. Turning to the next slide. While establishing standards is critical, it's not the end of the story. The standards only matter if they're implemented, and supporting materials are designed to help with that. Recently, we finalized 3 different application papers that we consulted on last year. You can see the list of those on the left side of the screen. One of those is on the supervision of climate-related risks in the insurance sector. This was a comprehensive update of our prior application paper on the subject, which discusses how the IAIS existing standards apply to climate-related risks after our limited updates to that supervisory material last year. Another the application papers is on supervision of artificial intelligence. This paper reinforces the importance of existing ICPs. For example, it discusses how ICP 8 on risk management internal controls applies, which is similar to the issue I heard Dieter talking about in the GME this year on the governance frameworks for AI, which has been a hot topic recently. It also discusses ICP 19 on the fair treatment of consumers and how AI affects that. On the issue of fair treatment, we also have a 3rd application paper on the fair treatment of a wide range of consumers. ICP 19 establishes the expectation that insurers and intermediaries treat their customers fairly from pre-contract to fulfillment of all obligations. That expectation is at the center of conduct supervision and is an important part of fostering trust and confidence in the insurance sector. Also recently published is the draft application paper on operational resilience objectives and toolkit for public consultation. You can register for the July 17th public webinar on our website, and we look forward to receiving your comments by September 29. In the area of recovery and resolution, we're working on updating our existing application papers to provide further guidance on the relevant updated ICP and FSV to ensure alignment with their material, and we'll publish that for consultation in Q4 2025. Before I conclude, I want to mention a few other important areas of ongoing work. Members, particularly from emerging market and developing economies, have shared their implementation challenges of IFRS 17. The IAIS continues to monitor and support IFRS 17 implementation, including at a cross-sectoral level with the FSB, IMF, and Bank for International Settlements Financial Stability Institute. We continue engagement with consumers, groups, and which is held in 3 parts over the year. This engagement brings forward consumer representative perspectives and hence is an important complement to other IAIS stakeholder engagements. We've also been thinking about whether and how to further embed these perspectives in our governance process. There are also 2 new projects underway. The first is a new project by the Market Conduct Working Group, which is composed of conduct supervisors to explore supervisory issues associated with consumers receiving fair value from their insurance products. The second is by our Governance Working Group. It will develop member-only material aimed at supporting supervisors more practically to have effective engagements with insurers' boards and senior management on corporate governance topics. With that, that's all I plan to say, so I'll hand back, and I'm happy to take any questions you all have.
Thank you so much, Matt, for that update. Really, really helpful. So indeed, we will now open the floor for any questions that you may have. Just a short reminder, you can send them to us in the chat, or you can ask to take the floor also via the chat. We did already receive one question before, which was actually very related also to your topic just discussed just now, Matt, from Consumers International, from Stefan Hall. Stefan is not able to join us, so I will just read out his question now. As the IAIS explores the role of AI in insurance, how will you ensure that supervisory guidance addresses not just technical and prudential risks, but also looks at consumer outcomes? He mentions issues like bias in underwriting, lack of transparency in automated decision-making, but also access for vulnerable groups. Also, he wonders what plans there are to collaborate with consumer representatives and civil society.
Thanks. That's a good question. I think I want to emphasize that consumer outcomes are very important in this work. AI has the potential to have significant impacts both on society and as consumers on part of that. It's something we're taking very seriously. If you look at our recent application paper on AI, there's a lot of discussion on consumer issues. It's not all negative. AI has both benefits and risks. On the benefit side, you'll see discussion of financial inclusion, how the AI can lower costs and facilitate faster processes for consumers. But there are some risks that we want to keep in mind, including the possibility of pricing on factors that aren't related to costs, such as willingness to pay. You mentioned ICP 19. I've talked about that already previously on the fair treatment of consumers, and there is discussion on that in this paper on things like transparency and explainability. There's some good content. The supervisory guidance explicitly addresses the need for insurers to mitigate unlawful discrimination in AI system, ensure meaningful human oversight, and quite a few other things. I'd also emphasize that this is a rapidly changing area. AI is developing very quickly, and there's a lot of diversity in the different applications of AI and how insurers are using it. We want to promote a proportional and risk-based approach that really focuses on some of the areas where AI use is most impactful, including on underwriting and claims handling. One area I'd particularly highlight, because this is something that was discussed as we were finalizing it, is how AI can affect pricing and the potential that it could lead to much more granular and potentially much more accurate pricing. My background is an actuary, so I tend to think that these more accurate pricing is mostly a good thing, at least on the property side, to have premiums more closely tied to risk and give people an incentive to mitigate that risk. I would be remiss, and the paper does discuss that does come with some challenges, and it could really exacerbate insurability issues, particularly for people with higher risks. As far as the engagement with consumer groups, I did mention earlier that we have an engagement structured in 3 parts over the year. We very much welcome engagement from consumers on this and other issues, and happy to hear their perspectives, particularly if there's things they think we're missing on this. Thank you.
Thank you, Matt. Thank you, Matt, for that. I see also we have a question in the chat coming in from one of our members. It's about the updates to the ICPs on recovery and resolution planning. And the question is, as more insurers are required to prepare resolution plans, if there are any expectations for a more prescriptive report or any considerations on sources of information to meet those expectations?
Thanks. So we did modify the standards on those last year to bring more clarity on where resolution plans are required and to bring better alignment with the FSB's key attributes on this. The state new standards do set expectations on insurers having a process in place for determining where these are needed based on some factors. Excuse me. I emphasize it's still, even with these changes, it's not a particularly large group of insurers that are subject to these. At a minimum, it's only any insurer that's assessed to be systemically important or critical if it fails. So I don't know, more is, I suppose, a relative term, but it's still not a particularly large group. In terms of content and whether it's prescriptive, I would say most of the IAIS material on this centers more on the who is required to prepare the resolution plan than on the what and the actual content in there. There's not actually that much, so I don't think it's prescriptive. However, the proportionality principle does apply to this requirement, and the supervisors can adjust this to their expectations as necessary on the detail on things like the risk profile and size and the activities of the insurer. Insurers are required to submit other information to the supervisors, both for development and generally, and where applicable, any information from those other sources may be used in the resolution plan. We do hope to bring more clarity on this, though. Last year we got these standards done, but as I said earlier, developing the standards is only part of the story. We really want to see implementation, and to help people do that and to give more guidance to other supervisors on this, we have these application papers. We're updating our application paper on this right now. We hope to consult on it later this year. We'd welcome any input on that, particularly if there are areas they think are unclear, if there's guidance. You mentioned this was from a member. If there's more guidance that our members want on these topics, we definitely welcome an engagement, and we'll take a look at that in the application paper. Thank you.
All right, thanks, Matt. Indeed, so stay tuned for that. Another question from also an IAIS member. It's on IFRS 17. So there was a question on what type of support the IAIS is providing for members who are considering or working on implementing IFRS 17.
So we've been serving as a forum for members to share their experiences with implementing this. Members, particularly from emerging market and developing economies, have shared their implementation challenges with respect to implementation of IFRS 17. And we continue to monitor and support the implementation. Recently, our accounting and auditing working group participated in an FSB roundtable on external audit and discussed the standards impact. And we'll contribute to the IAIS FSI IMF policy implementation meeting on 8th and 9th of October, focusing on IFRS 17 opportunities and challenges for EMDEs. And we continue to collaborate with the IMF to deliver IFRS 17 technical training to its members, particularly from EMDE jurisdictions. So far, I think training has been provided to more than 500 supervisors from around the world as part of this. And there's more to come. I think there are 2 more trainings scheduled for later this year in Sub-Saharan Africa and Asia, from what I understand. So more to come.
All right, thanks, Matt, for that. I see a few other questions coming in on the chat. So one question was around the ICS. So does the IAIS intend to publish any public or market-facing Q&As or FAQs or guidance on the interpretation and implementation of the ICS? So I think you touched upon that already a little bit, but maybe you can expand a little bit, or perhaps one of the vice chairs would like to take this question.
Yeah, we have put out quite a bit, and we've been working on more, including some technical stuff. I will turn it over to Paolo on this. He's really the expert. Paolo.
Thank you very much, Matt. I think we have received a few questions, and I think that depending on the type of question, we are assessing whether there is a need to make it more public. So expect some of the outputs of the Q&A process to become public shortly.
Thank you, and I may just stay on this topic because now I'm seeing another question on this as well. So Paolo, maybe also for you. A question from you, Francis. I understand there are separate work on ICS implementation issues to assist supervisors across different jurisdictions. And he's asking where items identified have broader market or company relevant interest. Would the IAIS consider making such implementation guidance also public, or would it stay for members only?
I think it'll have to be assessed on a case by case. So it depends on, I think, that the Q&A process and is helping us identifying and sifting issues or potential even mistakes we'll find in the level 1 and the level 2 text. So if that appears, we'll pass it to the appropriate governance and make public notifications.
Thank you very much for that, Paolo. Perhaps one final question that I saw coming in on the ICS, which is on the aggregation method. So whether it will be subject to the same assessment system and methodology as the rest of the ICS assessment, and notably around the line-by-line scoring principles that were set out in the HLPs that were published last week. I don't know, Matt or Paolo, if you want to say something on that?
I would just reiterate the prior language on this. We spent a lot of time as the organization on the aggregation method over the prior years doing the comparability assessment. We reached a deal on that last year. You can read. We don't really have much more to say on the aggregation method at this point. You'll see what's in there on HLP 6 covers that, but not. Mostly we've been focused on the AM over the last several years, so it's moved on to other issues. For right now, we will come back and discuss in the future, though. Paolo?
I was going to defer to HLP6 like you did. And effectively, actually, HLP6 is quite clear on that it's the assessment of the implementation of ICS in the form of the US aggregation method is subject to the same methodology of the ICS, but complemented with specific list of instructions to reflect different nature of the AEM. And this work which is ongoing. So effectively, this is a part of the next stage of the work which will come with the implementation assessment methodology.
All right, thank you. So we also received a question on our on the final slides, Matt, that you were presenting the work of the Market Conduct Working Group and some of their new projects. One of them is around the new work they're doing on value for consumers, and I think we have Brenda on the line who was pleased to be asking her question live. So we'll give you a few seconds to show you on the screen, and then when you're unmuted, you can ask your question live. Thank you, Brenda.
Thank you. This is Brenda Cood in the U.S. and I just wanted to know more about what the intention is in terms of the desired outcomes of that work. Are there products intended?
In terms of products, so this is at an early stage. We've started to have some discussion of this on PDC as we're shaping it. The idea is that we just want to make sure insurers, we've heard from consumer groups about the different challenges of making sure consumers are getting fair value for their insurance products. So we're starting up a project to look at this. As far as particular products, we've had some discussion on that at PDC. I think there's a tension there to, because value means different things to different consumers, but it's something we're taking a look at.
Yeah, thank you, Matt. And I will perhaps just add to that, indeed, that it's really about really bringing attention to the issue of how insurance products can be designed in such a way that they really deliver something that is worthwhile for the consumer, and that may differ also depending on the product and depending on the consumer as well. But as you said, Matt, we've only just started that project, so we can discuss more on that in further engagements, definitely. So I think there might still be time for one final question. I'm just checking with my colleagues if there was any other questions we received. So one final question that we received was from Peter Kochenberger. It's related to, again, the issue of ICP 19, so consumer protection issues and AI in this case. So his question is, could you go into more depth on planned IAIS work related to a claim management function and relationship with AI? So I think that is a little bit related to ongoing work of the FinTech Forum. So it's possible that actually Peter Braumüller may go into that later in a few minutes from now. But Matt, anything you want to share on that related to the application paper we just published?
Most of the work on the AI is occurring under the IAC as part of the FinTech Forum. We've had limited engagement at PDC on this so far, so I would defer to Peter.
Thank you, Matt. And I can say that indeed the FinTech Forum has planned further engagement and especially on discussing with our supervisors on how they are addressing AI. So the work is not finished with publishing our paper last week. So with that, I would really want to thank you, Matt, and also Paolo and Ricardo for being on standby for any questions. And thank you to the audience for your very relevant and good questions today as well.